The Reserve Bank announcement was in line with expectations from most economists. The repo rate is the benchmark interest rate at which the Reserve Bank lends money to other banks. Changes in the repo rate affect the prime lending rate, which is the lowest rate at which banks start lending to clients. The Reserve Bank says local economic growth is lower than expected. After the GDP contraction of 2.2% in the first quarter, there are early indications of modest growth in the second quarter. Still, the bank has lowered its initial growth forecast for this year from 1.7 to 1.2%. The Monetary Policy Committee identified a number of risks to inflation, including the strength of the US dollar, sustained high oil prices, escalating trade tensions, and electricity prices. The weakening rand is also of concern.
Since the previous meeting of the MPC, the rand has depreciated by 7.2% against the US dollar, by 6.2% against the euro, and by 4.9% on a trade-weighted basis.
The bank says inflation remained within the target band of 3 to 6%, but its model projects an increase in headline inflation.
As things stand now, we haven't seen inflation run away in developed markets, and we think that the Reserve Bank made the right decision, particularly in light of the very poor GDP growth we had in the first quarter, and likely we'll have another weak print in the second quarter.
The regulator says the impact of the higher VAT rate had been less significant than expected, but the weaker rand and higher oil price assumptions would have a bearing on inflation. At the same time, looming trade wars will have an impact on the local economy. John Bailey, Pretoria.